Something important may be happening with the Iraqi dinar, and if you've been following Iraq's economy for any length of time, today's developments deserve your attention. Over the years, countless headlines, predictions, and rumors have circulated across the internet, making it difficult to separate genuine progress from speculation. But every once in a while, something changes that encourages investors and analysts to take a closer look. Today could be one of those moments. Imagine seeing a currency that has spent years operating mostly within its own borders suddenly becoming more visible across international financial platforms. That doesn't automatically mean a dramatic change is about to happen, but it does raise an important question. Why is the Iraqi dinar beginning to attract more attention now than it has in the past? That's exactly what we're going to explore in today's video. We'll examine what is actually happening behind the headlines, why financial analysts are paying closer attention to Iraq, what the Central Bank of Iraq has been working toward over the past several years, and what all of this could mean for the future of the Iraqi dinar. Most importantly, we'll separate confirmed developments from internet speculation so you can make sense of the facts instead of getting caught up in unrealistic expectations. Let's begin with the development that has everyone talking. Recent reports indicate that the Iraqi dinar has started appearing on certain foreign exchange tracking systems and financial monitoring platforms in ways that were previously uncommon. For longtime observers of Iraq's financial sector, this has naturally sparked renewed interest. Now, it's important to understand what this does and does not mean. A currency appearing on additional financial platforms does not automatically signal that a revaluation has occurred or that one has been officially announced. As of today, neither the Central Bank of Iraq nor the Iraqi government has announced any reinstatement, revaluation, or official exchange rate change. However, increased visibility can reflect broader financial integration. It may indicate that Iraq's banking system, regulatory environment, and financial reporting are becoming more connected with international markets. That alone is worth paying attention to because these kinds of structural improvements often take years to develop. To understand why this matters, we need to look at where Iraq has been. For much of the past 2 decades, the Iraqi dinar has remained largely outside the mainstream global currency market. While Iraq possesses one of the world's largest oil reserves and has enormous long-term economic potential, its currency has faced significant obstacles, including years of conflict, political uncertainty, sanctions, banking reforms, and limited international accessibility. Because of these factors, the Iraqi dinar never developed the level of liquidity or international participation enjoyed by major global currencies. As a result, many international financial institutions simply paid little attention to it. But today, analysts are beginning to notice gradual changes. Instead of focusing solely on speculation about exchange rates, many economists are looking at something far more important: the underlying financial reforms taking place inside Iraq. This brings us directly to the Central Bank of Iraq. Over the past several years, the CBI has steadily implemented reforms designed to strengthen Iraq's financial system. These efforts have included modernizing banking regulations, improving compliance with international financial standards, tightening oversight of foreign currency transactions, and reducing opportunities for illicit financial activity. These reforms may not generate dramatic headlines every day, but they are exactly the kind of foundational work that international financial institutions look for before increasing confidence in a country's banking sector. Another significant point is Iraq's continued cooperation with international organizations, including the International Monetary Fund and other global financial partners. Such cooperation helps Iraq strengthen transparency, improve regulatory standards, and modernize its financial infrastructure. That doesn't guarantee future changes to the Iraqi dinar's value, but it does demonstrate that Iraq is working toward greater financial stability and international credibility. This distinction is extremely important. Many online commentators immediately interpret every positive headline as proof that a major currency event is imminent. In reality, responsible analysis requires separating progress from prediction. Financial reforms create the conditions for long-term economic strength, but they should never be confused with official confirmation of a revaluation. The facts show that Iraq continues to improve its banking system, strengthen financial oversight, and expand cooperation with international institutions. Those are meaningful developments regardless of whether any exchange rate adjustment occurs in the near future. And when we look at Iraq's broader economic picture, another key factor begins to emerge, one that has always played a central role in the country's financial future. That factor is the exchange rate environment itself, and in the next section, we'll examine why narrowing differences between Iraq's official exchange rate and the parallel market are attracting increased attention from economists around the world. Now let's talk about one of the most misunderstood aspects of the Iraqi dinar, the exchange rate. If you've spent any time following IQD discussions online, you've probably seen bold claims predicting an overnight jump in value or a sudden return to historical exchange rates. While those headlines attract attention, they often leave out the bigger picture. Professional economists don't just watch the exchange rate itself. They pay close attention to the economic conditions that support a stable currency. That's where the real story begins. One of the indicators analysts monitor is the relationship between Iraq's official exchange rate and the parallel, or street market rate. Whenever there is a large gap between these two rates, it can signal challenges within the financial system. Businesses and individuals may struggle to access foreign currency through official channels, creating pressure in the unofficial market. Over the past few years, however, Iraqi authorities have worked to reduce that gap through tighter financial controls, stronger banking oversight, and reforms aimed at improving transparency. While the spread still exists, many observers believe the government's efforts to narrow it represent gradual progress toward a more stable monetary environment. That doesn't mean the work is finished. Economic reform is rarely a straight path. Every country experiences setbacks, policy adjustments, and unexpected global events. Iraq is no exception, but what makes today's environment different is that many of these reforms are being implemented with greater coordination than in previous years. Another important factor is the Central Bank of Iraq's emphasis on strengthening confidence in the banking system. Rather than pursuing quick fixes, policymakers have generally focused on improving financial compliance, modernizing payment systems, enhancing anti-money laundering measures, and aligning banking practices with international standards. These steps may seem technical, but they matter because investor confidence is built on stability, not surprises. When international institutions evaluate a country's financial system, they aren't looking for dramatic announcements. They're looking for consistent policies, credible regulation, and long-term economic discipline. Those are exactly the areas where Iraq has been directing much of its attention. Of course, no discussion about Iraq's economy would be complete without talking about oil. Oil remains the backbone of Iraq's economy, providing the majority of government revenue and serving as one of the country's most important financial assets. When global oil prices remain supportive and production stays strong, Iraq typically generates higher export revenues. Those revenues contribute to foreign currency reserves held by the Central Bank of Iraq. Strong reserves are important because they give policymakers greater flexibility when managing monetary policy and maintaining confidence in the national currency. It's one of the reasons analysts closely monitor Iraq's reserve levels alongside exchange rate developments. However, it's equally important to remember that strong oil income alone does not automatically lead to changes in a country's exchange rate. Exchange rate decisions involve many factors, including inflation, fiscal policy, banking sector stability, economic diversification, government priorities, and broader financial conditions. That's why responsible analysts avoid drawing simple conclusions from a single positive development. Another trend attracting attention is Iraq's growing role in regional economic cooperation. In recent years, Iraq has sought to strengthen trade relationships with neighboring countries, attract foreign investment, modernize infrastructure, and improve its banking connections with international financial systems. These efforts are designed to support long-term economic growth, rather than produce immediate currency changes. For investors watching the Iraqi dinar, these structural improvements may be more meaningful than short-term rumors because they address the foundations of the economy instead of focusing only on headlines. This brings us back to the recent increase in attention surrounding the Iraqi dinar. As Iraq becomes more integrated into international financial networks, it's natural that additional financial institutions, analysts, and market observers begin monitoring its progress more closely. Greater visibility should not be confused with official confirmation of a revaluation. Instead, it reflects growing interest in Iraq's ongoing economic transformation and the reforms taking place behind the scenes. The key takeaway is simple. The strongest signals often come from steady institutional progress, not from sensational predictions. And while no one can accurately predict if or when any future exchange rate policy could change, the reforms currently underway provide valuable insight into the direction Iraq appears to be moving. That is why many experienced analysts continue to focus less on internet rumors and more on measurable developments such as banking modernization, regulatory improvements, reserve strength, and international financial cooperation. So where does all of this leave us today? After looking at the evidence piece by piece, one conclusion becomes clear. Iraq's financial story is evolving, and it's evolving in ways that deserve attention. The reforms we've discussed aren't isolated events. They're part of a broader effort to strengthen the country's economy, modernize its banking sector, and build greater confidence in its financial system. For many long-term Iraqi dinar holders, this is encouraging, not because it guarantees a specific outcome, but because genuine economic progress is far more valuable than short-lived speculation. Strong institutions, transparent financial policies, healthy foreign reserves, and continued international cooperation are the kinds of developments that create lasting economic stability. Another reason many analysts are paying closer attention is the growing visibility of Iraq within the global financial system. As Iraq continues improving compliance standards, expanding banking reforms, and increasing engagement with international financial organizations, more institutional observers are naturally monitoring its progress. Institutional investors think differently than retail investors. They rarely react to internet rumors or social media excitement. Instead, they study economic indicators, policy consistency, reserve strength, banking reforms, and long-term fiscal discipline before making decisions. That's why many experts believe the current phase of Iraq's financial development deserves careful observation. At the same time, it's important to keep expectations realistic. One of the biggest mistakes investors can make is assuming that every positive headline automatically points to an immediate currency revaluation. As of today, there has been no official announcement from the Central Bank of Iraq or the Iraqi government confirming any reinstatement, revaluation, or change to the official exchange rate. That fact remains unchanged. What has changed is the overall direction of Iraq's financial reforms. Instead of asking, has a revaluation happened? A better question might be, is Iraq continuing to strengthen the economic foundations that support long-term financial stability? Based on the developments we've discussed today, many observers would say the answer is yes. That doesn't eliminate uncertainty. Global oil prices, geopolitical developments, domestic political stability, banking sector reforms, inflation, and international economic conditions will all continue influencing Iraq's financial future. These are complex factors, and no responsible analyst can accurately predict the exact timing of future policy decisions. That's why it's always important to distinguish between confirmed facts and personal opinions. Whenever you hear dramatic claims about overnight wealth or guaranteed exchange rate changes, ask one simple question: has this been officially confirmed? If the answer is no, then it should be treated as speculation, not as established fact. Responsible investing begins with reliable information. It means following official announcements, reviewing credible economic data, and understanding that meaningful financial reforms often take years rather than weeks. Patience is rarely exciting, but throughout history, it has often been one of the most valuable qualities for long-term investors. As Iraq continues modernizing its economy, strengthening its banking sector, and deepening its international financial relationships. Every new development adds another piece to the larger picture. Whether those reforms eventually lead to future exchange rate changes is something only Iraq's policymakers can determine. Until then, the smartest approach is to stay informed, remain objective, and evaluate each new development based on evidence rather than emotion. That's exactly what we'll continue doing here on this channel. Our goal isn't to promote hype or unrealistic promises. It's to bring you balanced analysis, verified updates, and clear explanations so you can better understand the developments shaping Iraq's economy and the Iraqi dinar. If you found today's analysis helpful, make sure to hit the like button so more people interested in the Iraqi dinar can discover this information. Subscribe to the channel and turn on notifications because Iraq's economic story continues to develop. And we'll be here to break down every important update as it happens. Finally, we'd love to hear your thoughts. Do you believe Iraq's ongoing financial reforms are laying the groundwork for stronger long-term economic growth? Or do you think there are still major challenges that need to be addressed before significant changes become possible? Share your perspective in the comments below. Thank you for watching. Stay informed, stay patient, and we'll see you in the next update.